Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you so much for joining us. Let's start off with business headlines. Oil prices lost more ground this morning as concerns about the fragile state of the global recovery and demand for crude and fuels were heightened by data showing China's oil imports fell in May. Brent crude was down 11 cents at $71.38 a barrel after declining 0.6% overnight. U.S. oil was off by 13 cents at $69.10 a barrel, having dropped by 0.6% in the previous session. Crude prices have risen in recent weeks, with Brent up by nearly 40% this year, and WTI gaining more than that amid expectations of demand to return as some countries succeed in vaccinating populations against COVID-19. Restraint on supply by the Organization of Petroleum Exporting Countries and allies has also helped to buttress prices, but major oil importers like India have been going through waves of infections that continue to threaten the expected pickup in global demand in the second half of this year.
And back here, the federal government says about 7 billion naira is required to fix public infrastructure damaged by vandals nationwide. While the Minister of Works and Housing, Mr. Babatunde Fashola, explains that the ministry requires about 4 billion naira, his counterpart in the FCT is asking for at least 2.6 billion naira. This follows a town hall meeting on protection of public infrastructure in Abuja, organized by the Ministry of Information, where the Minister of Transportation, Mr. Rotimi Amechi, reveals that about 200 cases of rail line vandalism have also been recorded in the last 2 years. Let's take a listen.
5 federal ministers, hundreds of participants, one issue for discussion: the protection of public infrastructure in Nigeria.
Honorable Minister, sir.
The convener of the town hall meeting and Minister of Information gives perspective to the discussion.
The administration has invested heavily in providing infrastructure in addition to constructing and rehabilitating existing ones. However, in recent times, such laudable efforts of the government have been thwarted by some unpatriotic citizens.
The damage on public infrastructure in Nigeria is enormous, as narrated by the ministers.
Tamburawa Bridge in Kano, illegal mining activities that exposed all of the piles sustaining the weight of the bridge. And in all of this, government has had to respond. So the first one, the cost of repairs was 203 million naira. In the second one, it was 605 million plus naira. The Tamburawa Bridge cost us 1.8 billion.
Let me tell you the number of cases we've had, the vandalizations we've had. The whole of Northern District, 10. The whole of Northeastern District, that's where we have the worst case. No, not there. North Central is the worst case. Northeastern District, you have 43. North Central District, where you have Jas and those people, you have 50.
And shareholders of MTN Nigeria will from today, Tuesday, June the 8th, begin to claim 9 naira 90 kobo per share dividend. Investors who control over 17.6 billion shares see the profit margin as commendable in the face of the disruption caused by COVID-19 in the year under review. The management of the company during their annual general meeting is promising to focus on dividend growth among other plans.
I hereby declare the meeting open.
This gathering of the Executive Management Board and shareholders of MTN Nigeria is to carry out an appraisal of the company's performance for the financial year ended December 31st, 2020 in this annual general meeting. Due to COVID-19 guidelines, only a few investors are here in person, with others joining virtually.
472 shares.
The challenge of the year under review, nonetheless, the company is proud of its achievement within the same period and so announces dividend for its 141 shareholders.
5 naira 90 kobo per every 2 kobo ordinary share to shareholders whose names appear in the company's register of members, bringing total dividend for the year ended December 31, 2020 to Naira 90.
Subsection 7 of the company.
Investors commend the performance of the telecommunication giant for the year, while they hope for more returns in the years ahead.
Given that you didn't have an opportunity to test run a pandemic, so one must also give credit for the ability to work around those challenges. But coupled with the fact that even the company was also able to pay or give returns to shareholders.
1%.
The company considers the contribution of its workforce to the success recorded in the past year, attributing this to its spread.
MTN's winning edge has been largely because from day one, the company decided to ensure global spread of their services.
MTN's new chief executive officer wants investors to look forward to more fruitful years of operations.
It's a great starting point. We have a great company and we need to continue to be dynamic and agile to deliver on value for the future, on alignment of our priorities with the national interests and on our ESG objective.
While promising to continue its incremental value creation for shareholders and society at large, MTN is asking for the support of government, particularly in the provision of unfettered access to the right-of-way.
And the Islamic finance industry in Nigeria, according to Fitch Ratings, remains nascent and it's in its early stages of development, but there is potential for growth. This view is based on Nigeria being the most populous country in Africa with the 5th largest Muslim population in the world, along with rising government support for the sector and large financing requirements. Jas Bank, the first non-interest bank established in Nigeria operating under Islamic banking principles, says it offers regular personal banking, corporate banking for organizations, and also trade financing with a high ethical standard and best practices. Executive Director, Business Development North, Jas Bank, Sirajo Salisu, joins us now to tell us more. Thank you very much, Mr. Salisu, for joining us on the program.
Good morning.
Thank you very much, and good morning, Nigerians. It's my pleasure to be here.
Good morning. So let's have an overview of Islamic banking and finance in Nigeria. As Nigeria's premier non-interest bank, how has the journey been so far for your bank?
Okay, once again, thank you very much. Before the experience or the journey, let me take this opportunity to just shed more light on non-interest banking or Islamic banking, as some people used to call it. It's a system of banking or a financial transaction that is Sharia compliant. When we say Sharia compliant, Islamic Sharia compliant, which Sharia is a popular word among non-Muslims. So a non-Muslim can actually be a shareholder of a non-interest bank. A non-Muslim can be a staff of non-interest bank, as we used to have at the moment. A non-Muslim can be a customer of a non-interest bank, not only an ordinary customer, but in court, it can be a borrowing customer, and that borrowing can be up to any extent one can think of. A non-Muslim can be a regulator, as we used to have. Most of the people regulating Islamic banking or non-interest banking in Nigeria, either from NDIC or CBN or SEC, they are non-Muslim. So it's actually a system of financial transaction that is Sharia compliant, but it can accommodate all parties, not only Muslims necessarily.
Mr. Salisu, with increasing competition in the non-interest financial system, especially new fully fledged banks coming on stream, how well positioned is Jas Bank, ahead of the competition?
Well, as the saying goes, if you don't take care of your customers, competition will do so. But ironically, we are not looking at sister full-fledged Islamic banks as our competitors. They are actually our brothers, our sisters, our cousins. But the major competition is actually the conventional bank. And that is why you see gradually we are moving toward that, giving people alternative. So we are facing the conventional banking system as our major competitor, not the full-fledged Islamic banks. And for that, like I said, it's a situation where you have to service your customers very well. We call ourselves partners to our customers. We're not only here to finance them or give them loans. and just wait for them to profit from them. But we are partners in the business, we are partners in progress, and we look at that as our major strength, and that is our preparation to face the competition.
So can you highlight some of your product offerings and some of your unique selling points?
Yeah, you see, when you're talking about product, I'm being a little bit cautious so that we use a terminology that everybody can understand. We have what is called a sales plus markup transactions. In sales plus markup transactions, we are talking of you buy an asset or a product, and you are selling to your customer based on what you call a markup, meaning a profit markup on it. Or you are talking of leasing, you lease an equipment or you lease a service, and you also rent it to your customer and you make profit from there. Or you are talking of going into a partnership, meaning a customer or your own customer can bring in something and you bring in a particular amount and you join hands together and you go into that partnership. These are all various products that we use to service our customers.
All right, so Jas Bank has recorded, so much success in the last few years, especially the last financial year. Your financial performance was quite impressive, gross earning up about 33% year on year, and profit after tax up by 19%. How did you, manage to stay above water despite the COVID-19 pandemic?
You are very correct for that, and this is just a practical testimony of how resilient Islamic or non-interest banking is. If our customers are happy, we are also happy. If our customers are not doing well, certainly it will also affect us. But the fact that non-interest banking is transaction-based, this is a situation where you are not working on any speculation. This is a situation where you are dealing on a particular asset or a particular transaction that is not based on hearsay, but you are doing it together with your customer and each party is happy. And that is why you see our performance in Q1, like I said, is showing that non-interest banking is actually a system of banking that people should look at. Because like I said earlier, if we are happy with if our customers are happy, we are also happy. And the performance of Q1 has shown that. Well, other banks or other customers are looking at how to survive in a situation where we partner with our customers, we restructure transaction according to the reality of life, or we restructure again according to how the market or how we find ourselves. So this is just some of the reasons that you see those performance in Q1.
Now, reviewing your financials, we observe increase in number of branches to about 40. That was in 2020, when banks are trying to reduce physical branches. Can you shed more light on your strategy here?
Yeah. As much as people are trying to, we also try to use technology, but in some circumstances, you just have to be very physical. And this is the reason why we try to be in almost all the necessary corners of Nigeria. We are at the moment in almost all the geographical regions. We are in the south, we are in the south, we are in almost everywhere in the north except just one state. And the idea of opening more branches in conjunction with technology is just to show our presence, as we call ourselves partnership bank. We are very close to the customers. We are together with you. You are seeing us physically, and that is just why we are increasing, and we will also continue to increase. In this very soon, people will begin to see us in Abeokuta, people will see us in Akure, people will see us in Dutse, people will see us in Damaturu. So we'll continue to open more branches as the need arises in conjunction with the use of technology.
All right. Well, looking at your latest result, first quarter 2021, gross earnings rose by 43% year on year, and the profit after tax spiked by about 54%. Do you expect this trend to continue for the remaining quarters of 2021?
Yeah. Thank you very much. We are very optimistic about the that level of growth you continue to see, because from 2011 to 2020, if you check the record, you see a tremendous growth almost year in, year out. And we expect this growth to continue, as you mentioned earlier, that the industry is nascent, and we are very happy that some players are coming on board. The more players we have on board, the more strategic we become, the more comfortable we become. Like I said, they are not our competitors, but we will work together and continue to boost the non-financial services, non-interest financial services in Nigeria.
Now, as you are aware, Nigerian investors are mostly, after dividend. Can you discuss your dividend payout policy?
Well, this will be the second year running that we are paying dividend, and every investor is actually after dividend, and that is why we are not resting on our toes, that to make sure that from last year and continuously, inshallah, we will continue to pay dividend. And the policy of the dividend is not something we will discuss here, but our aim and our hope and our objective is to pay the dividend. We have started paying, even this year we are paying, and inshallah we will continue to pay.
All right, what is your outlook, for the bank, as right now, Nigeria is going through a lot of challenges, with insecurity and all of that. What is your outlook for the sector?
Yeah, you see, this as much as we continue to pray for these security challenges to ease up, but we have to look at it that it's going to be business as usual. Business will continue. If farmers refuse to go to the farm, hunger will be around our corner. If businesses refuse to operate, there wouldn't be problem around the corner. If businesses are not paying tax, government also will not function very well. So in spite of these security challenges, we look at it as a business as usual. So we are not going to rest or to think that to be discouraged by the insecurity. As much as we continue to pray for peace to reign, we also have to continue to service our customers. And that is why we even mentioned some of the new branches that are coming on board. The issue of insecurity is very unfortunate, but it's something that we are hoping and gradually it will ease up.
All right, Mr. Salusi, just before we let you go, how can the government leverage on Islamic finance to solve the problems of underdevelopment or drive its policies in agricultural revolution, energy, and job creation?
Yeah. So thank you very much for that. And we have always been mentioning to people that government can leverage on Islamic finance to actually bring about development in all these sectors you have mentioned. Practically, when you move around Nigeria now, you see some signage, Skook Road, meaning this is a road funded by Skook. Being non-interest banking, a transaction-based activity, you need to tangibly see what you are involved. If government is using the Islamic finance or non-interest finance to fund most of these projects, like we did in Skook, it can be the same thing on the road concessions. It can be the same thing on the sectors like railway corporation. I give you an example. If government today wants to have, just like if you build a car park, government is not the owner of those motors or the vehicles at the park. Government can equally look at railway operation and begin to encourage entrepreneurs to say, come and run these sectors. And this is where Islamic banking or non-interest finance can come in, because we can go into the purchase or leasing of those equipment. We can use the concession, and it's an avenue that government will use to reach out to. If you use the MSME, and like I said, we are transaction-based, people will now be practically out of poverty, and we will use our system to bring out the best out of people, instead of just financing where the rate of returns or the interest charge will weigh down some of these activities that are a little bit speculative.
All right, thank you very much, Mr. Sirajo Salisu, the Executive Director, Business Development North at Jas Bank. We do appreciate your time this morning with us.
Thank you very much.
We take a break now, and when we come back, Commodities Market Update is next. Just stay with us. All right, let's talk commodities now with Dumebi Iyeke, one of the research analysts with Financial Derivatives Company. Hello, Dumebi. Good morning. Good to see you.
Good morning. Good morning.
Oh, well, I guess it seems the talk around Nigeria now is all about this Twitter thing.
Yeah.
And it's interesting to know how much, the country is actually losing. Every hour, 100 million. And when you look at monthly, we talk about 75 to 100 billion.
That's a big number.
Yeah.
You see, I can't even say anything.
I mean, Twitter right now has become like a hub for a lot of Nigerians. There are a lot of young Nigerians that have, gotten jobs through Twitter. A lot of them are doing business through Twitter. A lot of them are influencing through Twitter. So there's so much happening on Twitter that with this shock to the Twitter space, and not just only Twitter space, to social media, there is so much ruckus happening. So right now, the fact that there's a Twitter ban, young people, which is a large chunk of Nigeria's population, are largely affected. And the question now is, or the question on the minds of every young person, is this indefinite? How much of this can we really take? Because there's so many risks. There's the fact that this particular sect of Nigeria's population that is active on Twitter is about 40 million users. And every day there is some tweet, people are enjoying themselves with Twitter, making money off Twitter. And now that this has happened, their market access is completely shut down. So SMEs that are benefiting from Twitter are having to deal with this, are not taking this lightly. So it's a huge shock to their business. And remember, there's already high unemployment rate.
Absolutely. And this is a country that is talking about, lifting 100 million Nigerians out of poverty.
Exactly. So right now, imagine a situation where we're trying to lift 100 million Nigerians out of poverty, and about 40 million now, you've sent them back. Wow. So there is that huge shock. And then also, Twitter has become a perfect market for information. So there's huge access to information at no cost. So now there is the risk of consumers being exploited, because now there will be information asymmetry. There's so many things that a lot of people find out from Twitter. There are a lot of things, for example, there's so many young people, oh, I just got a job, or I was told to come come to this particular area. Oh, what do you, Twitter fam, what do you think about this? And then you hear so many people coming about it, there's so much information that people get through Twitter. Now that access is gone. Then you also have the fact that there is Twitter is the active usage of Twitter in Nigeria, has been able to give investors some, hint as to Nigeria's evolving technology and e-commerce space. With this, investors are skeptical. And remember, Nigeria needs as much investment as it can get.
But still, counting the cost here, what is Twitter itself losing right now?
I mean, for Twitter, Twitter is a global thing.
Exactly.
So Nigeria is a huge market, yes, one of the biggest markets for Twitter in Africa.
But Nigeria is just a minute
market. But Nigeria
Twitter
is just a fragment of the entire world. So the truth is, we stand more to lose than Twitter. And also remember that it's not just about the government, it's about the consumers. The consumers are at the receiving end of this Twitter ban. The young people are at the receiving end of this Twitter ban. And they make the highest percentage of unemployment rates in Nigeria. Youth unemployment right now is about 45%. Imagine with the Twitter ban right now, it could skyrocket to about 50 to 57%. Now, if these people are unemployed, the question is, what will they be doing?
And
there is the high risk of crime.
Absolutely, I was coming in. That would now heighten the insecurity situation that we are already and trying to deal with. Okay, so looking at this whole thing now, let's bring it now down to the commodities market space. How will this affect it?
So the quick look at this is business. The entrepreneurs that are losing money with the fact that Twitter is banned right now. So there is the fact that these people, let's just look at the the chain reaction.
Yeah.
So you have an individual who makes about 10,000 naira every day from Twitter. Make the 10,000 naira, use it to buy foodstuff, use it to pay. From there, you're going to have to buy fuel. Let's just say this individual has a car. You buy fuel for your car. You buy fuel for your generator. You save just a little chunk because, I mean, there's really almost nothing to save. But if you look at 10,000 naira every day for 7 days a week, that's 70,000 naira. So you have this individual that would make 17,000 naira every week. Now is short of 70,000 naira.
Wow.
So there is no money to buy foodstuff. There is no money to buy. So the market woman who would have received that 500 naira or received that 1,000 naira has lost a customer.
There's a ripple effect.
So there's a ripple effect. Yeah. So this and the truth of the matter, once there is low demand, low aggregate demand, we will definitely see that impact on food prices. We'll see that impact on inflation.
Do you think the federal government will be pressured?
The truth is this. There's definitely going to be some pressure from the international community. We've seen CNN talk about this. We've seen the U.S. Embassy make some comments. We've seen, so there is some pressure, but we just have to keep our fingers. No one really knows what step the government is going to take. But at the end of the day, we cannot overlook the fact that the consumers are at the receiving end of this. Why? Because these are the most important people right now.
Yeah, so, and that brings us to the fact that, in policy making, you have to consider the pros and the cons.
Exactly.
So if you think that when you take a decision and that decision is going to have more negative impact, I think it's important that you look back and think through, that same
policy making requires
decision.
Balance, a lot of balance, yes.
Okay, so before we look at the global oil market, let's look at what's happening in Ekiti State, where the government has returned to 18,000 minimum wage and slashed the salaries of the executives by 25% for the next 3 months. What do you see to be the implication of this, and how will it affect the price of commodities, particularly, I guess, in that state?
Oh, yeah.
So the first thing is this. This definitely points to the fact that there's a revenue gap. So this means that this state or some other states of the country don't have enough to fund their state. They don't have enough to pay salaries. They don't have enough to feed the people within that state. So clearly there has to be, this state has to look inwards. How can we internally generate revenue? How can we make enough to pay the people that work in this state and also increase the revenue for this state? So clearly there's a revenue gap. And now with the slash in salaries, and this just simply means that there is less aggregate demand or consumer demand within the state is going to reduce. And this is going to have a ripple effect on commodity prices within the state. So we could see prices increase.
All right. Brent is currently above $70 per barrel. Some analysts actually believe this bull market might be over right now.
I mean, we've seen the oil market is a very sentimental market. So once there's any news, once there's any information, we see the oil market react, either positively or negatively. By the end of the day, with Brent at $70 per barrel, Nigeria still stands to gain in terms of revenue. So we could see oil revenues receive increase. And remember that Nigeria's oil production quota, has also been eased. So we could, with the increase in oil production, increase in oil prices, or oil prices trading at $70 per barrel, Nigeria still stands to gain in terms of revenue. And this could help to fund the budget deficit, 2021 budget deficit.
But some still say that.
Well, even as we're seeing the Brent, climbing over $70.
Yes.
And in fact, the WTI actually went about $70 for the first time. Yeah, but that we haven't seen much of impact of that on our forex market in terms of liquidity.
Yes. So the truth of the matter is that there's so many things that play out in Nigeria's foreign exchange market apart from revenue from oil. There's so many other factors to look at. There's export earnings from cocoa. There's export earnings from sesame seeds. There is, there's so many things. There's diaspora remittances. So all of this factor play out in our external reserves, which is used, to fund, or with the CBN uses to intervene rather in the forex market. And the truth of the matter is this. with Brent at $70 per barrel, even though this is good news, you know, for government revenue and how that this could, you know, have some ripple effect or have some ripple effect or benefit in the forex market, we have to remember where the consumer stands to gain or stands to lose. And with Brent at $70 per barrel, we are looking at a potential increase in the PMS price again. The question now is, how much more can the average Nigerian take?
Well, in other news, price of onions.
That's another one.
That's another one.
You know, some time ago, we were talking about onions being the new gold.
Yes.
Are we going to see that cycle
Even more than
again?
gold this time.
Particularly this way. I mean, if they are
Exactly.
talking about, you know, not bringing or shipping the onion to the south, just wondering what's going to happen.
I mean, to answer your question about onions being the new gold, if it's going to be the new gold again, it's people in the south that would have that testimony, so to say. The truth is this, with Opman making this decision, definitely we will see it, you know, reflect in the price of onions. Onions is a, you know, widely consumed condiment. We use it for stew. We use it for eforiro. We use it to garnish our chicken. We use it to cook our meat. There's so many things we use onions for, plus the health benefits. So that's why, and the fact that a lot of people are also, you know, being very conscious about their health. And onions is a main, you know, it's a major a condiment for your healthy diet. So we definitely would see an increase in the price of onions. I mean, right now the price of onions per bag is already increased to 27,000. So if this decision by Opman lingers, we could see the price of onions, you know, increase about 30,000, 40,000.
Maybe a shift to garlic.
I don't know how
not
that's going to be.
Absolutely.
Absolutely.
Likes garlic.
No
and,
way.
You know, people might not really see it as a substitute, so
Absolutely.
to say.
It can never be a substitute. Not for me.
I like garlic.
No. Anyway, of course, it's not just onion that we're talking about here. We're talking about tomato. We're talking about pepper. And what's the other one? The tatashe and all that. So all of those, we're seeing their prices you know, go up. Anyway, let's look at Dangote's fertilizer plant that has commenced operations. I guess that's good news.
That's some good news.
Yes. So how will this impact government revenue? You know, and of course, I guess there might just be some kind of potential risks there.
Yes, so the Dangote fertilizer plant has kicked off operations, which is good news in terms of forex revenue for the government. The estimated revenue is about $1.2 billion annually, and if the operations, you know, are very effective and efficient, we could even see revenue for the government increase. So this is good news. The potential risk is this: with insecurity rising, we know that fertilizers could also be used to create bombs. So with insecurity rising, there is that concern, there is that fear. If, you know, fertilizers could now, you know, be used for the creation of bombs, well, we'll just keep our fingers crossed and hope it never gets to that.
It will not get to that. Baby, thank you very much. It's always a pleasure having you on. Well, we'll still have more time with you this week, and that should be on Thursday.
Yes.
All right. Thank you.
Thank you.
Okay, we'll take a quick break. We'll be back in a moment. And time for our morning calls to the markets, and we have Aniete there on board. Hi, Aniete. Well, should we say the gains we saw last week was only a mirage?
Good morning, Jimmy. Well, I wouldn't call it a mirage, but although, you know, we just when the market was celebrating the 4 consecutive sessions, positive consecutive sessions that we recorded last week, we just went back. We went back in the red. Take a look at the figure. Down by 0.10%, but it's not because it's not a mirage. I would say it was just profit taking, because of course we went up by 1.23% week to date, and then of course month to date we're up 0.7%. Although year to date we're still down by 3.9%, or almost 4%. But let's just say the performance we saw yesterday is as a result of profit taking. So, but if you take a look at sectoral, it was only the oil and gas sector that was uptick, which was 0.31, or more than 0.5%. And then, of course, the downturn was majorly from the banking sector, And that's no thanks to profit taking on the shares of GT Bank as well as Zenith Bank. So largely it was because of the profit taking on the banking and some other components across the consumer goods, industrial goods, insurance, while Lafarge Africa was a major downer there. And then for consumer goods, we had Honeywell flour. So now that just shows you that investors are really looking at some of the market best stocks. But to bring us up to speed about the market, let's talk to Tajuddin Olayinka, who's a stockbroker at Vermont Securities. Thank you for joining us, Tajuddin.
Yeah, good morning. Thank you.
Okay. So we started the week, although last week we were up. And of course, my colleague asked me if it's just a mirage. So can you bring us up to speed about the market? How is it trading at the moment?
Well, market is still relatively flat. Right now, it's about 0.01% down. That's close to being flat. But that's just it has just moved between 0.01 and 0.02%. So market is still a bit very quiet at the moment. But if you look at last 5 trading sessions, you'll see that market has actually moved, for that particular territory, showing indication of a bullish market. But if you look deeper into what gave rise to those bullish movements, especially given that market was down yesterday, if you compare yesterday and the last 5 trading sessions, it shows one thing that yes, market appeared bullish last week, but it wasn't so strong. Because, high cap stocks were responsible. So, in all indications, it's so clear now that there is some kind of apathy because the value traded is also very low. It's not impressive. So, if you look at it, considering the value traded, the stock that were for movement last week, it shows that it's not so strong the bullish market. So that is the state we are, at the moment. Market is still a bit. I won't say we have a very strong market, but really we have a market that is visited with investors apathy.
Okay. So thank you for bringing us up to speed at equities market, Tajuddin. Okay, so that's Tajuddin Olayinka, who's a stockbroker at Vermont Securities. So let's move over to the unlisted securities market. It's also negative sentiment. It was down by 0.8% yesterday. Of course, that's for the start of the week. Also, volume, value, deals, all low. And then over to the debt market, still not too good picture. It was a bearish, was actually mixed. And then, of course, at the treasury bills, it was also not much of activity there, just on the 26th of April, 22 instruments. And then, of course, if you move over to the CBN's bill, also not too much of activity. Only the 30th of August, 2021 had 12 deals. So that's it. So it just shows you that the market it's kind of not much of activity going on there. So then, well, that's all we have. So we just have to keep our eyes on which of the markets that investors might be shifting into.
Well, taking it from where what Tajuddin said, investor apathy there for stocks, that buttresses analysts' position, for the need for investors to position in only fundamentally sound stocks as the weak macro environment remains, a significant headwind, particularly, for corporate earnings. But we'll see how that goes. Thank you, Anita.
Pleasure.
We take another quick break now. When we come back, we do an opening call to London. To stay with us. All right, let's turn our attention there in London with Juliana. Good morning, Juliana. Let's kick off from the corporate scene. Tesco and the French supermarket group Carrefour have announced the end of a 3-year alliance that was meant to lead to greater choice and lower prices for customers. What may have influenced this decision?
Good morning, Chimiza. You're right. 3 years after the two supermarket giants signed this landmark deal to combine their global purchasing power, the deal is off. It's come to an end. I believe it fizzles out on the 31st of December this year, and both groups have decided, they've released a joint statement saying that the alliance will not continue. We don't really have much further information other than the fact that both bosses said that they want to focus on their own endeavours. We know lots in the UK about Tesco and how they fared during the pandemic, especially at a time where people are locked in their houses. Supermarkets have done fantastic during this period. So perhaps the vision that they wanted to achieve has been altered by the pandemic. There had been some whispering from economists and observers that perhaps a Brexit could potentially be one of these reasons. We know that there have been shortages at the ports, but Tesco have denied this. As soon as this statement was released, Tesco shares were up 0.5% on the FTSE 100.
Well, on the data front, UK retail sales surged in May by the most since the COVID-19 pandemic began. So we can rightly say now the economy is bouncing back after lockdown restrictions were eased.
Absolutely, it's bouncing back. Just have a look at those PMI figures that we were speaking about last week, showing that services, manufacturing and construction are all at record high levels. There's pent-up demand, the fact that Brits have somewhere to go. We've got places to go. I've got places to go on the weekends. Of course, if you want to go out, you're going to spend your money, which is exactly what the Chancellor and the Prime Minister wanted, and that's the data that's been recorded by the British Retail Consortium, showing that in the month of May, retail sales were up 10% on what they were in 2019. So the numbers that we're seeing aren't due to last year's numbers. They're being compared to what was happening before the pandemic. Even Springboard, which is another kind of overseer, they're noting that high street footfall is up 17%. So yes, this is another clear sign that the recovery in Britain is indeed happening.
In the meantime, the Bank of England is to publish details of its 2021 climate change stress test this morning and a sneak peek into what the report may look like.
Well, the report, the conclusions will be released in May next year. But yeah, this is part of the transition into being a net zero carbon economy, which is Britain is obviously spearheading that. The Bank of England will be testing banks and insurance firms to make sure they're resilient enough to cope with not just the transition, but in case something severe happens, if there is bad weather, a hurricane, God forbid, huge flooding. So they are going to be tested on three things. One is if they don't react, one is if they react late, and one is if they have an early reaction, which is, of course, what the Bank of England wants to achieve. So, yes, we will know more about this in about 12 months' time.
All right, and in the meantime, you'll be giving us more updates later in the day on Business Incorporated.
Thank you.
Okay, let's take a peek into the crypto market with Laddie there. Well, Laddie, Bitcoin is not doing good at all, but don't tell me it's because Trump called it a scam against the dollar. Now, look, in his words, he said, Bitcoin just seems like a scam.
Yeah.
I don't like it because it's another currency competing against the dollar. And he says he wanted the dollar to be the currency of the world. How?
Well, that's Trump for you. Nobody's actually surprised because Trump, you know, has never been a fan of Bitcoin or anything that wants to threaten the dollar.
Absolutely.
So that was actually expected.
In fact, central bankers, I think that is the scare here.
Oh, yes.
I mean, this cryptocurrency, digital currency, you know, threatening the fiat money.
Central banks are rattled all over the world right now. But El Salvador doesn't seem to care. They are actually
they are making it a legal tender.
Yeah, it's quite interesting times, you know, for crypto market. But that's the effect right there. It's all red. Bitcoin trading at $33,000, down about 8% this morning. Market cap is also inching down, has fallen way below the $2 trillion mark we used to have before. $1.49 trillion now, down about 10% this morning. Bitcoin dominance is inching up slowly at up 0.25%. Price of Bitcoin this morning down 9%, 24-hour volume $39.91 billion. So Bitcoin is still, trading around that 200-day moving average, but it has broken multiple supports at 34,000 and 33,000. So we could see a 30,000 Bitcoin soon if these supports keep breaking. But also we could see an uptrend from the 32 range. Some indicators are actually showing that as a possibility. It is oversold. The RSI is completely oversold, down below the 40 region. The MACD also below the bullish region this morning. Price of Ethereum, $2,480, down 10%. Anytime Bitcoin, swings either up or down, the altcoins actually suffer. The king of altcoins is actually down too at this point. Top alts by market cap, BNB, down a big 13% this morning at $334. Cardano, $1.50, down 12.23%. Dogecoin, that's Elon Musk's baby, is at 32 cents, down 13%. No alt is spared except maybe T-Fuel this morning. Yeah, T-Fuel, 50 cents, still maintaining that range, up by 8%. Anyway, let's talk to Olumide Adesina now, financial market analyst. Hello, Olumide.
Yeah, hello, Ladi.
Good morning. Good morning. Well, happy red day. Bitcoin is not looking strong at all. And, we have Trump, calling it a scam. We have miners also, heavy selling with miners. Looks like we still have a lot of downside.
Yeah, exactly like what you said earlier. You see, those macros have already weighed on investor sentiment. And don't forget that in the past couple of days, institutional investors have increased their selling pressure. Data from CoinShares revealed that in the past 3 weeks, about $300 million have been moved from Bitcoin alone, the Bitcoin market. And that also triggered some breaks in the support level. And right now, Bitcoin is trading around 32,000. That's really going to add some more selling pressure. So we are seeing that once Bitcoin breaks below 30, then the bearish market is confirmed. But I think, like you said earlier, Donald Trump's recent statement about Bitcoin being a scam and the fact that Bitcoin is playing the role of the dollar also added more selling pressure. So we are expecting to see the framework of the digital dollar coming out in some days' time, and also we want to see the reaction at which the Chinese, because there are mixed signals already. Chinese are saying that most of the miners operating in the country is illegal, but that remains to be seen if that would temper selling pressure. But right now, it's not looking good for Bitcoin, and Bitcoin is like the founder crypto, so it's already affecting other altcoins.
Well, it's so funny how the narrative changed for Bitcoin so fast. A few months ago, it was all about greed, all about Bitcoin going up. Anyway, Olamide, how are fan tokens holding up?
Yeah, fan tokens too are the same kind of being affected. They're already part of the crypto market already, but I think the fundamentals around fan tokens seem to help them independently, because if you look at the fact that certain Formula One teams are already going into this industry and rewarding their fans with giveaways and other voting rights, that has increased buying pressure across. But then the fact that the football season is over, we are seeing a bit weakening sentiment, but in a couple of weeks' time, we expect that will resume. And don't forget that Argentina recently launched, the football team launched a fan token, so that will also increase that in the ecosystem. So I think that
we'll continue the conversation.
Crypto assets will stand the test of time.
Okay, Olumide, thank you so much. Always great to have you. I do enjoy the rest of your day.
Thanks.
All right, Jimmy, there you have it. Only the stable coins in the green right now. It's not looking so good.
I was listening to one analyst on Bloomberg, and he looks very optimistic that Bitcoin will bounce back. Exactly. But he's saying, I mean, if you must invest, if you're a risk taker, that's the time. This is the time to go into, you know, the market, but not with your rent money.
Exactly.
Of course. So if you must invest, you have to be wise, and you have to get appropriate financial advice from professionals. Yeah. That's the way to go in this market. Anyway, that's a wrap on the program, and don't forget to join us by 1:30 this afternoon for Business Incorporated, where we will bring you up to date on the happenings and the global business scene. I'm Chimezie Obi Iwago.
And I'm Ladi Williams. Thank you for watching.